Hello and welcome. I'm Matthew Bullock. I'm the head of portfolio construction and strategy for EMEA and APAC here at Janus Henderson. Today, I'm joined by John Kerschner, who is our global head of securitized products. So, John, you're in London this week meeting clients to talk about securitized fixed income and specifically around collateralized loan obligations or CLOs. So, can we start with the very basics, which is what are CLOs? And what makes them so well suited to the current environment?
Yeah, and thanks for having me. Pleasure to be here, particularly during Wimbledon, and got some World Cup going on and F1. So great week to be here. But yeah, for CLOs, I think people make them out to be more complicated than they need to be. CLOs are a securitization like any other securitization, a portfolio of loans that you put together, put a framework around it, a rating, and then divide up the cash flows from those loans into different layers of risk. So that can be mortgage loans, credit card loans, auto loans, and in the case of CLOs, it's corporate loans. So why are CLOs important for this type of environment? I think what we've seen, and we talked about it earlier this morning in a roundtable, is that there's a lot of uncertainty out there, particularly when it comes to rates, whether it's tariffs or what's going on in the Middle East or what's going on with the central banks globally, supply chain issues. I think a lot of people who, if they've been around for a while and are used to rates just kind of being a tailwind and going down, that is no longer a case. CLOs are floating rate, but very high credit quality, and often are very liquid as well. So they're a very good addition to the portfolio because you get diversification, you get that ability to be defensive versus rates, but at the same time, it's a very high credit quality, high yielding product. So all those things are good for our clients.
So you touched on a little bit of it, but from your conversations, what would you say are the common misconceptions or what people are most surprised about when you explain what CLOs have offered throughout the years?
Volatility and liquidity are two things that come up time and time again. What I mean by that, people think that there's a lot of drawdown risk in CLOs. They think there's a lot of credit risk. But when you think of a CLO manager is buying 200 to 400 different leverage loans to put in a CLO. And then our products, which are often ETFs, not all of them, some are funds, but often ETFs of CLOs have several hundred line items as well. So when you have a big issue dislocation in the loan market, usually it's a very small part of the underlying product. And investors and traders understand that. So that just because you have a default over here doesn't mean it's going to affect the CLO or CLO ETF. In fact, it's quite the opposite. And then at the same time, it's a $1.3 trillion market globally, trades billions of dollars a day. Probably within fixed income, I would argue the third most liquid market behind U.S. Treasuries, U.S. agency mortgages, and then comes CLOs because, again, not a credit product and very large. So those two misconceptions we dispel every day.
So you and the team are responsible for managing it's very close to $70 billion now of assets in the securitized space. So you have a very broad perspective of what's happening in the market. So what would you say the main differences are between CLOs in the US and the EMEA market, both as an investment opportunity set, but also how clients view and use securitized assets?
Yeah, one interesting thing is the market over here in Europe and the UK is smaller for CLOs. It's about a third the size. Still large, but not nearly as large as the US. But what's very pertinent today and front of mind of investors is software and technology and AI. And it turns out in the US, CLOs on average, as an average number, have about 15% of exposure to that industry. It's much lower here in Europe, just not as tech focused or tech centric. So particularly down the capital stack in triple Bs and single As, we're actually buying European CLOs in order to get less exposure to that software that we're still doing our bottom-up fundamental analysis, but this is a risk that could just be kind of contagious throughout all markets, right? And so we want to protect against that as much as possible. So I think that is one of the most interesting differences between the US and Europe. But because there are fewer industries in European CLOs, the credit enhancement or the support or the safety, all different words of the same thing, is actually higher over here. So more safety and actually more spread, less exposure to software, all those things are very good for how we're investing in this space.
And then a final question to you, John. So you obviously take an active approach to CLO investing. So what would you say are the key benefits to doing that?
Well, look, there are 130, give or take, CLO managers, and most are very good, but they approach risk very differently. Some are very much risk seekers. They tend to invest for the bottom of the capital stack. They actually own their own equity. They're very upfront saying that. Some are more risk averse because maybe they're managers for insurance companies. We tend to be more attracted to those type of managers, but you just have to understand their story and make sure what they're telling us actually is reflected in the portfolio. And I think that's paramount for us. But what we're really trying to do when we're building a portfolio of CLOs is obviously get the best risk-adjusted returns. And there are many ways of doing that depending on what managers you're using, what kind of loans they're investing in, and then maybe most importantly, how much risk they're willing to take. And so that's what we're doing every day. And I think we do it better than any of our competition. And that's why we've had the growth we've had.
Great. Well, thank you very much, John. I know that you're a regular contributor on our Insights page on our website. So to the audience, if you're looking for more information on CLOs, please feel free to visit our website. So with that, thank you all very much for listening.